What's up, guys? TJ the Wheel Deal coming at you. Let's talk all things wheel today. I've had this channel now for a few months, and I'm constantly asked, like, why'd you start the channel? First and foremost, it's just a trading journal for me, guys. I manage quite a bit of money and have a lot of positions open, over 200 to be exact. And it's hard to keep track of all of it. So I'm like, well, if I just put out all these videos, then I have a reference point. I don't have to be writing everything down. I also created the journal for my son Jeremiah, guys. I want him to be able to look at what dad does for a living, and eventually, he can kind of hopefully do what I do or something very similar. Everybody has to pave their own way. I've been investing off and on for about 25 years. I didn't do anything special with it. It was just buy, hold, and hope. I saw a little chart a long time ago that said if you invest a couple $100 a month, eventually you have $1,000,000. And that's what I started doing when I was 19 years old. And it wasn't always 200 or 300 a month. Sometimes I only had $50, $60 a month. So I just did the steady Eddie thing, and I just knew that eventually I was going to win the race. And here I am. Things have gone better than I could have ever imagined. Why else did I start the channel? It's very personal, guys. I was watching a lot of YouTube, doing a lot of research, and I found that not a lot of people had any type of transparency if you weren't willing to pay for a Discord or a Patreon. No one had full transparency, so I'm like, well, I'm pretty confident in what I do for a living because I've been doing it for years very successfully. So I'm willing to show a portfolio to be obviously the smaller one. Here we started with the $215,000 challenge, road to $1,000,000, but I'll show them everything, the good, bad, the ugly, and the indifferent. And that's what you've gotten for me for over 100 videos now. And you'll be getting them for the next couple of 100, 300, 400. Who knows how long I'll keep doing this. But I don't have a Patreon. I don't have a Discord because I just don't need your money. Thank God I make my own. So feel free to follow along, subscribe. You might learn a thing or two, and reach out in the comments, guys. I don't have a lot of followers and a lot of comments yet, so it's pretty easy for me to keep track with everyone and keep up, and I'm pretty good about responding as well. Let's talk about the wheel strategy, guys. What is it? You find a stock that you want to own for the long term, and you name your price via a cash secured put. So let's say it's trading at 10. You're like, I like it at 10, but I love it at 8. Well, that might be a good entry point for you. You've done the research, you've studied the company, you want to be in it for 3 to 5 years. You sell some cash secured puts at 8, and you're going to do what? Collect premium. First way we get paid, the premium from the cash secured put. I'm looking for an annualized return on my premium of about 30%. Preferably 40. Now, mind you, I deal with a lot of high growth stocks, so they will pay you for that volatility because there's a lot of risk, because there's a lot of movement in the stock. So the higher the volatility, the higher the premium, right? The risk is always commensurate with the rewards in the stock market, as is life, guys. So I'm looking for 30 to 40% ROI just on my premium alone via cash secured puts. I'm looking for an ROI of about 20% on covered calls. I'm more conservative with covered calls because I've been investing long enough to know that if you just hold the stock long enough, you're going to outperform what you can make selling risky covered calls at the 0.3 and 0.4 deltas. Anyway, full disclaimer, I am not a financial advisor or anything of the sort, but I do have a license to make a lot of money. So follow along, you might learn a thing or two. I do have a pretty big portfolio in the stock market, and sometimes it yields north of 6 figures on a monthly basis via premium. Anyways, as y'all know, my channel is full transparency. No Discord, no Patreon. We've already covered that. And we'll show you the good, the bad, the ugly, and the indifferent. So let's get started. First and foremost, guys, you need to be adequately capitalized. I have yet to hear one wheel expert talk about that, guys. You need to have enough money if you want to trade the wheel successfully, just to have a fighting chance. If you're going to deal with a $10 stock, you need about 10 grand. True story. You need to have enough bullets in the chamber to manufacture a win. It's very, very critical. It's imperative to your success, guys. If you're not adequately capitalized, you're already behind the 8 ball, and I promise you it's just a matter of time. you're going to lose money in the stock market because you're scared money at the poker table, guys, and those guys never win long term. So if you're going to deal with a $10 stock, you need 10 grand. You could probably get away with 5 grand, but I would say more comfortably you need 10 grand. And then I would strongly recommend you use my 25, 25, 50 strategy. So the first bullet's 25%, the second bullet's 25%, and then your third bullet would be 50% of how much capital you're ultimately willing to allocate to that position. Then, after you're adequately capitalized, now you're ready. You got to treat trading like a business, not a hobby. Hobbies cost you money. A business can make you a lot of money. Pick a stock that you want to own. Minimum 3 to 5 years. Study the stock, guys. Study the industry thoroughly. Figure out if they have a moat. They have, competitive advantage. What's the TAM? What's the total addressable market? What are their margins? Are they even profitable? And if they aren't profitable, a lot of my companies that I deal with are not. When are they expecting to be profitable? Because Wall Street in the short term is a voting machine, right? Benjamin Graham, intelligent investor. Long term, it's a weighing machine. Valuations matter, guys. That whole SPAC craze and meme craze, that shit is over. That's way 2020, 2021. Now you got to really know what the hell you're doing. You can't just throw something at the board and it's going to stick and it's going to go up 30 or 40%. You're going to go talk crap at the bar and act like you really know what you're doing. Those days are long gone, guys. You got to really, really have a handle on this, and now you're going to get your butt kicked. You got to study these markets. You got to study the sector, studying the industry, and then study your stock thoroughly, guys. Study it for a year if you have to. Get comfortable with it. Understand, most stocks trade within a range, right? It's like the Bollinger Band. So figure out what the moving averages are, the 50, the 100, the 200, the 20, the 9. I mean, there's so many that you can look at, right, depending on what platform you're using to do the technical analysis. Look at the RSI. Whenever selling cash secured put, I'm looking for an RSI close to 30, 35. Something that's a little bit oversold. That way I can get max premium and a pretty favorable entry point. Really, really important. Study who's on the board of directors, who's the CEO, what's their track record, guys. The management, the leadership team is really, really critical to your success, guys, because they're ultimately the ones, they're the ones flying the plane. So they're either going to keep it afloat, doing well, get you to the final destination, or you're going to crash and burn. It's really, really important. That's one of the main reasons that I'm invested so heavily in SoFi, is because I'm a big fan of Anthony Noto. The guy's an absolute stud. He's got the resume. Go check him out. Pick a strike price that you're really comfortable owning the stock at long term. Because in this market, stocks are going to go against you, and it happens in a very big way, and it happens really, really quickly. So don't get too aggressive and premium drunk and be like, oh, this is 40% ROI. TJ said I'd be good. No. You need to find a stock that you want to own and decide what's a fair price to own that stock at, guys. It's really, really important. We already talked about the 25, 25, 50. So the first step of the wheel, guys, you're going to sell cash secured put. First, so we get paid is going to get the premium of the cash secured put. And you want to stick to deltas, 0.2 to 0.4, pretty safe on cash secured puts. 0.3 is kind of like the industry standard, I would say, here on YouTube land. Everybody promotes 0.3. Whenever I'm really bullish on owning the stock, I bypass the cash secured put, and I'll just buy the stock, and I immediately sell the covered calls if it's in my buy zone. But to each his own, do your own thing. Again, be adequately capitalized. Whenever the stock goes below your strike price, you're going to get assigned if it happens on the expiration day. You need to be excited. If you're not excited whenever you get assigned, guys, it tells you everything you need to know. You don't really want to own that stock. It was just a cash grab for you. And that's okay, but recognize it, because it may be time just to cut your losses at that point if you're not actually comfortable owning that stock. I tell people, until I'm blue in the face, I only wheel stocks that I actually want to own. That's just my own personal thing. Do whatever you want to do. But whenever I get assigned, I'm excited. And then the second way that I'm going to get paid is I'm going to sell covered calls, and I'm going to collect that premium, and I'm looking for about 20% annualized return on my investment for the premium on the covered calls. And my delta, I want to stay at about a 0.15 to a 0.2, because studies have shown that you're going to outperform if you just ride the shares up. I mean, selling covered calls is a real nice way to manufacture some income, gives you some downward protection, downside protection on your stocks. But at the end of the day, you're going to make a lot more money just holding the stock long term, and it's less stressful as well. Keep in mind, whenever you're selling puts and calls, you have the obligation to either buy that stock or sell that stock. Whenever you're the one paying the premium and you're the buyer, you have the right. The seller has the obligation. It's really, really important to make sure that that's accurate in your mindset, because some people get all freaked out. Oh my God, I was assigned. Well, no shit. You're kind of obligated to do so. So anyway, so the three ways you get paid real quick: the premium for the cash secured put, premium from the covered call, and then the share price appreciation. Really, really important. Other thing I want to talk about real quickly that's not talked about enough is rolling a position. You simultaneously close out a position and you open up another one, and usually you're able to do so for a net credit. Really, really effective tool in your arsenal, guys, because it's your saving grace, man. I say I roll right until I'm right, and until I'm damn good and ready to take assignment. That's what I do for a living. So I don't have to be really good at picking real solid entry points and study the technicals that much. If I understand that time is on my side, and I can roll right until I'm right, and until I'm right and ready to take assignment. That's just the way that I trade the wheel, and it's really worked for me for a few years now. When you close out trades early, it comes down to PPD, guys, premium per day. So let's say that I got $100 in premium for a cash secured put, and there's, it's a 30-day trade. But in 10 days, I'm already at $60 profit, right? I'm at 60%. Might be time to close it out, because I can find another trade that will yield me more premium per day for the remaining 20 days of that contract. A good rule of thumb that I use is about 75%. Once I'm at 75% profit, I usually look to exit stage left and lock in the win. Keep in mind, guys, whenever you're selling puts and calls and collecting that premium, those are all short-term capital gains taxes. So keep that in mind as well. A lot of people don't talk about the taxes as well. And again, you need to have a realistic time horizon. Whenever trading the wheel, you need to be okay with being wrong on an entry point. That doesn't mean that your investment thesis is wrong. It just means that your initial bullet, your initial entry point was wrong. And that's okay. We're all going to be wrong. It's not a referendum on yourself or anything like that. I mean, the stock, just like Warren Buffett says, it doesn't even give a shit if you own it. It just doesn't, guys. It's not emotional, and you shouldn't be either. So just collect your money from your puts and your calls, and eventually you'll have some nice share price appreciation, and you will outperform someone that's just buy, holding, and hoping long term. What else? Let's talk about something nobody wants to talk about. Let's talk about the books. You need to keep really, really good books at all times. You need to know what your true cost basis is. What's cost basis? Let's say you own a stock at 10, but you collected a lot of money via cash secured puts and covered calls. You're going to take all of that premium subtracted by the total collateral invested, the money invested to actually acquire those shares, and you're going to get that number. You're going to divide it by the total shares that you own, and that'll be your adjusted cost basis. Little tip for you, okay? What else, guys? That is pretty much just it in a nutshell. So just to recap, so I'm going to stay under this 15 minutes, is pick a stock that you want to own. Decide what price you want to own it at. You're going to collect your money from the puts, from the calls, and the share price appreciation. And you need to get excited if and when you get assigned, guys, because That's the name of the game, ultimately. Anyway, guys, this is the Wheel Deal signing off. As always, may your skies stay blue and your stocks green. Peace out. God bless you guys.